My younglings, welcome back. This is episode 3 of my series, if you will call it, to everything I know. I'm not going to call it a boot camp. But what I will say is that this is all the knowledge that I've gathered over my last 2.5 years of trading. So I hope you can utilize this. Today, we're going to go over break of structure and market conditions. Okay, so we're going to start with market conditions actually, and we're going to go over consolidation and trending markets. We trade both, but we want to avoid consolidation. Let's get into it. All right, so let me trick my camera here. We have our chart, right? We talked about the chart yesterday. Candles, open high, close low, open low, close high. You already know that whole spiel. Now, let's get into market structure. What are the two, not market structure. Let's get into market conditions. What are the two market conditions? We have consolidation, which essentially what it means is that we found a range of price that everybody kind of agrees on, so we don't really move out of that price, and it looks something like this, right? I love to call this barcoding. That's my favorite term, barcoding. And usually what this means is that this happens before a distribution phase, which would be the trending market, okay? Now, a trending market would be something like this, where we are here, we make a big move, and we continue making big moves. See how we're clearly going in one direction. That's a trending market. This is consolidation, this is trending. Within trending markets, we have things such as manipulation. So for example, for consolidation, this is a classic strategy I'll expose right now, power of 3 of consolidation, manipulation, distribution, where you enter here, and then you target the lows. Super easy strategy, but manipulation is important, but at the end of the day, the way that I want to teach this and the way that I want to do this is I want to teach you guys trending markets because we want to trade trending markets. We don't want to predict when the trend's going to happen. We want to trade the trending market itself. Okay? So now, followed by that, those are two types of markets. Followed by that, we have to understand now market structure. What is a bullish trend and a bearish trend? Bullish trend is so simple. Bullish is up, bearish is down. So bullish is going to be the following, and it's just two things. You have, let's say price starts here. Bullish, price is going up, perfect. And we're going up, and we're going up, and we're going up. So what are these? These right here are your highs. So this is a high. This is a higher high. So it means that price went higher than the previous high. This is a low. This is a higher low, meaning that price, the low of the price, so the bounce, because you have to fill the orders, is higher than the previous low, indicating, wanting to continue higher. We don't want to go any lower. And for the opposition, it is the exact same thing. For the opposition, it is going to be the same thing, but backwards. For bearish, so down, we start up here, we make a move down, we make a retrace. We make a move down, we make a retrace, we make a move down. And this could go on forever, forever, forever. Same thing, same theory. It's a high. This is our high. Then we have a lower high. This is our low. And then we have a lower low. Okay? This is connected to this. This is connected to this. What is this telling us? This is telling us that price is wanting to trend lower. We want to trade lower. There's objectives lower. That's what we're doing, okay? So those are the two things that you need to understand. Now, the big thing in between these is what is called a break of structure. A break of structure is when we go from a bullish trend to a bearish trend. So let's put this into an example here. And once I explain this part, we can go into the chart and take a look at consolidation markets, trending markets, and then the breaks of structure. So we have, boom, we're trending up. Here's our high. Here's our low, higher high, higher low, higher high, higher low, higher high. Wait a minute, lower. Sorry, so we have a higher low. Then wait a minute, lower high. What? Okay, it's not a break of structure yet. We have to have both of those. In order to break structure, you need to have a complete shift. So we have to go from higher highs and higher lows to lower highs and lower lows. What is this? That right there is our lower high. Now, we made a low right there. Now we make a lower low. So look at this. Between this range, so this is our high, This is our lower high. This is our low. This is our lower low. This is a lower high. This is a lower low. Boom, we break structure right here. Enter your trade. Going down. Market is going to shit the bed. You see how we went from a trending market up to a trending market down? And the break of structure was the confirmation of that. And obviously for bullish, it's the same thing, but backwards. We could literally just flip this image like upside down, and it would be the same thing. You go from down, you have lower highs, lower lows, lower high, lower lows. You make a higher low, and then you make a higher high, boom, break of structure. Now we can expect price to continue in that direction. Obviously, it's not as easy as just this, because if it was this easy, everybody would trade. There's many other things that add onto this, which are, like I said, objectives, fair value gaps, higher time frame analysis, so on and so forth, which we'll get into follow in like other videos. So now, in this part of the video, I'm going to be going over the chart itself and showing you guys examples of these things. And as a matter of fact, before that, I'm gonna say that just so you understand, every single time frame is the same. It moves the same. You know, there's breaks of structure in the 1 minute, and then there's breaks of structure in the 4 hour. But there could be there's going to be many 5-minute breaks of structure within that single 4-hour candle. So you need to understand that. That's why higher time frame is so important, because the higher time frame is what tells you, okay, we want to go in one direction, and whatever happens inside of that 4 hours, I don't really care. We could be going like this, sideways, and then move, perfect. Or we could be doing, you know, a bunch of breaks of structures, that's fine. We care about the higher time frame and the higher time frame objectives, okay? So now, let's go into a random time frame, like the 5-minute, for example, here. And let's go back to like here. Okay. I can immediately see that we have this couldn't be a more clear example. And one thing I forgot to know, okay, a break of structure has to be a closure of a candle. It can't just be a wick. It has to be a closure of a candle. What I mean by that is you can't see a wick right here, for example. We're trending down, right? I'll mark it out with the arrow so we can see. We're trending down, okay? Right here. We make a move up, and then we're trending lower. We make a move up, and then we're trending lower. If this was a wick, it wouldn't be a break of structure. We have to close above this most recent, like higher low. And a good way to look at this, and what I try to use, is using a line. This is obvious now. This is super obvious. What we have here is exactly what I said. We have a downtrending market. We're going down, we're going up, we're going down. Perfect. We have our high, we have our lower high, we have our higher low. Now what do? We move up past this lower high, making a new higher high. And then what do? We corroborate it and confirm it with a new higher low right here. So therefore, boom, we broke structure right there. At this point when we cross right here. This is our break of structure. That it's literally as easy as that. It doesn't get any easier than that. Okay? So that's break of structure for you. And I'm going to go back to the candles so you can see it in the candles, right? So again, we push down, we go up. We push down again, and then we push higher than this low, and then we push low and high. And as you can see, we continue. We go low, high, low, high. And only when we make a lower low right here and we make a lower high right here, do we see continuations lower. And again, I'll show you guys in the line. You can see we're going up, down, up, right here. We're going down. We went up a little bit. We went down heavier. Boom, break of structure right here. It's just like that, and price continues to go lower. And then it switches yet again from here. Again, another example. We're trending lower, going like this, right? We're going like this, we're going like this, and boom, we make a low. We make our high, we make a lower high, then we make a higher low, then we make a higher high. Boom, break of structure right here. Now what does price do? It goes high, low, high, low, high, low, and then boom, big high. It's literally just like that. It's literally that simple. And if you can master what is a true and what isn't a true break of structure, then you're gonna understand my strategy in 2 seconds. It's literally as simple as that. Now the candles, and you might ask, it's like, wait, why don't we just use the lines? Well, that's where the candle magic comes in, because certain candles show you a direction. You'll be able to start reading the candles in the future. Like this is all, again, repetition. You're gonna have to be on the charts doing all these things to understand. So now that we've gone over breakout structure, let's go over consolidation and trending markets. Here's a perfect example that we see. What was a trending market? A market that moves. This market is moving right here. Boom, we're trending down. We're trending down, we're trending down, we're trending down. What happens here? Wait, we're going sideways. We're barcoding. What the heck? We're barcoding. We're still, this is considered barcoding still. We're not going anywhere. We're staying within this range. What the heck? All of this is consolidation. All of this consolidation. We don't like consolidation. We don't like trading consolidation. Oh, what happens? Oh, we're finally ranging higher. Perfect. And then obviously we do this, which I explained earlier, and then look what happens. We go from, I'll even go like this. We go from chop, 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 chop to move. And then we go move, chop, 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 move. And then up here, chop, 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 move. Then down here, chop, 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 move. Then up here, chop, 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 move. And then here, chop, 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 until move. All the way down here. It happens all the time. And I'm going to go into a higher time frame. Let's go to the 4 hour here. Exact same thing. What do we see? Chop, 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 move. Chop, 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 move. Chop, chop, chop. As you can see, there's literally a perfect barcode right here. Barcode, 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 barcode. Move down. Move up, move down. Move up, barcode, 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 move down. And then now we're trading within a barcode lately. So there's your barcoding. And now that we're in the higher time frame, I can also show you breaks of structure. What do we see? Right here, we're trending higher. We're going up, we're going down. We're making a higher high, we're making a higher low. We're making a higher high. Hold up, we made a lower low. We made a lower high, we made a lower low. Oh crap, okay, we break structure right here. What does price do? It makes a low, it makes a lower high, and then it just shits the bed. Just like that. Boom, break a structure on the 4 hour. Literally as simple as that. It couldn't get any easier. It's all you have to do, and what I want you to do now is you need to look at this, and you need to be able to tell me every single break of structure that you see. Every single one. Okay? And here's a great example of what a right and wrong break of structure is. We make a low all the way down here. Look at this. We make a low all the way down here. Is that a break of structure? No, because the candle closed up here. So if you go to the line, you'll see it doesn't even show up. We're in a clearly trending market. This wick doesn't exist because we're trending higher. So it's not a break of structure. But this right here, this candle that did close lower than the most recent lower low does show up in the line bar. Therefore, we can predict that our break of structure was right here. Literally as simple as that. It couldn't get any easier than that. That's all this is. That's literally all this is. And like I said, you can go back anywhere. I chose these random bars because I don't care. Like this is how I do it. Like I could go back anywhere. I'm not going to because I am so confident that it works. And you just have to put the work in. It doesn't matter how much I tell you. You have to be the one to put the work in. Because if you don't put the work in, then you're never going to understand this. You're never going to actually get it. Be like, wait, I get break of structure now. I understand what this means. So practice. You need to practice until you are so certain that you know what a break of structure is. What type of market we're doing. If we're consolidating or we're trending. You need to know all these things. Okay? It's going to be a shorter video. It's going to be 13 minutes. I don't want to keep you guys waiting forever and ever and ever. This is just, I'm going to try to make him shorter. So this is, again, breaks of structure and types of markets. Breaks of structure are when we go from a trending market like this back down into another trending market like this. Within this, there might be consolidation, but we're going to be trending, okay? So make sure that you understand. And again, what is the other concept that we learn? Consolidation, going sideways, not going anywhere. Boom, we make a move, that's a trending market. Consolidate, consolidate, consolidate. Boom, we make a move, that's a trending market. To consolidate, consolidate, consolidate. Boom, we make a move, that's a trending market. Those are the conditions you need to understand. And you need to know that we want to trade here. We want to take a trade here. We want to take a trade here. We don't want to trade in this whole bullshit area. We don't want to trade in this whole bullshit area. We don't want to trade in this whole bullshit area. We want to take trades right before market goes and shits the bed. Right before market goes and skyrockets. That's what we want to do. We want to catch those moves as they're happening. We don't want to predict them, but because if we try to predict them, we might get caught in some drawdown or we might just lose straight up. We want to trade with the trend. We let price tell us where we're going. It's so simple. And I'm literally just gonna leave it at that. I'm not gonna over explain. And if you can't understand this, like obviously leave a comment down below. And on Discord, add me on Discord. I'm happy to answer all your guys' questions. I'm like every single day, I'm there analyzing, showing you guys exactly why I'm trading, educating. So make sure that you actually pay attention and like you actually do this, because like, bro, I'm looking at you right now. And if you take this seriously, it's gonna change your life forever. It's changed my life forever. I don't see money the same again. I mean, I just bought a $400 flight just like that today, not even thinking about it, because I made so much more than $400 today. So I'm like, holy crap. But then if you think about it, $400, that's a full doctor's salary for the day. Just like that. So this can change your life so drastically. All you have to do is put in the work. And I'm telling you, I put in the work. I made the repetitions. I was there every single day. And I made it happen. And now I'm making money. I feel great. Like everything is going awesome. And the best part of all, I'm free. I'm not stuck in an office all day long. And I can do whatever I want. If I want to go play golf in the middle of the day on a Wednesday, I can. I have nobody telling me that I can't. So you gotta just put the work in for those 2 years, or maybe less. I guarantee you less if you actually listen to me. And then you can be free for the rest of your life. You can go teach all your friends about this, and you can all be free, live in a beautiful house, and do whatever the fuck you please for the rest of your life. So take this seriously. Take this to heart. Really try to learn this. And if you don't understand this video, then go watch somebody else's video that makes it easy to understand. There's so much free information out there. That's why I'm making this. I'm making this so that the people that don't understand those videos might understand my videos. That's the whole point behind this. Okay, so that'll be it for today. Breaks of structure, types of markets. Next episode is going to be liquidity and liquidity sweeps. Super simple stuff. All right, I'll leave it at that. I'll catch you guys in the next episode. Peace.